Have you ever felt like you need a finance degree just to understand how to start investing? Well, you are not alone. In the next few minutes, we are going to completely demystify this whole world. We're going to break down the best, most straightforward options for anyone just starting out and turn all that confusion into real confidence. So, let's dive right in.
Okay, so here's our game plan. We'll kick things off at the starting line just to get our heads in the right space. Then we'll decode the three main types of investments you need to know about. After that, we'll get personal and help you find what fits your goals. And finally, we'll lay out the exact first steps you can take, like today.
All right, first up, the starting line. You know, this part is really all about one thing: shifting your perspective. It's about going from feeling totally intimidated by all the jargon to feeling empowered to actually take control and start building your future.
Does this feel familiar? You know you should be investing. You hear people talking about it all the time, but trying to figure out that very first step, it can feel like you're just staring at a brick wall. Trust me, if you feel that way, you are in very, very good company. Honestly, you can think of investing like learning a new language. At first, it just sounds like a bunch of noise, right? So let's just say we're going to be your personal translator. Our whole goal here is to make these kind of complex ideas simple, clear, and most importantly, something you can actually use.
And now we get to the good stuff, the core of it all. Let's start decoding what I like to call the big three investment options that every single beginner should get comfortable with. We're talking stocks, bonds, and funds.
First up, stocks. And you know, the idea is way simpler than it sounds. When you buy a stock in, say, a company like Apple, you're literally buying a tiny, tiny piece of the company. It means you own a sliver of every iPhone, every laptop they sell. So if the company does well, the value of your little piece can grow right along with it.
But here's the classic trade-off, right? The pros and cons. Stocks, for sure, have the highest potential to grow your money over the long term. But, and this is a big but, they can be super volatile. That means big swings up and also big swings down. You've got to be prepared to ride those waves, which is why you always hear that it's about time in the market, not timing the market.
Okay, next up, let's talk about bonds. This is a great comparison. If stocks are all about owning a piece of something, bonds are all about loaning your money out. You're basically acting like the bank. You lend your money to a big organization, maybe a corporation, or even the government, and in return, they promise to pay you back down the road with interest.
So the key words here are safety and predictability. With bonds, you're probably not going to see those huge, exciting gains you might get with stocks, but you're also not going to see those scary, dramatic drops. For a lot of people, bonds are all about bringing some stability to their financial plan.
And that brings us to our third option, which is a huge favorite for beginners: mutual funds and ETFs. Okay, imagine you're making a smoothie. Instead of having to go out and buy apples and bananas and spinach and blueberries one by one, you just buy a pre-made mix that has everything you need already in it. Well, that's a fund. It's one single investment that holds a whole basket of different stocks and bonds.
What you're getting here is instant diversification. You're not putting all your eggs in one basket. If one company in that fund has a bad year, it's okay because it gets balanced out by all the others. For beginners, this is just a fantastic way to lower your risk and make the whole process so much simpler.
So let's just pull this all together for a second. Looking at this, you can see that relationship so clearly, right? Stocks are your high-risk, high-growth engine. Bonds are all about safety and lower returns. And then funds, well, they give you that simple, diversified middle ground. Just kind of keep this picture in your head as we figure out what's right for you. Okay, so we've covered the what. Now we get to the most important part of this whole thing, the you. Let's figure out which of these options is actually the right fit for your personality and your specific goals in life.
So, which one are you? Are you the tortoise or the hare? The tortoise is all about protecting their money, seeking that slow, steady growth. The hare, on the other hand, is a bit more comfortable with risk because they're chasing after those faster, higher returns. And here's the thing. There's absolutely no right or wrong answer. It's just about being honest and knowing yourself.
Now, beyond just your personality, your timeline is everything. You have to ask yourself, what am I actually investing for? Are we talking about retirement in 30 or 40 years? Or are we talking about a down payment on a house in 5 years? Because that answer changes everything about your strategy.
And this right here lays it out perfectly. If you have long-term goals, like 10+ years away, you've got time on your side. You can ride out the market's ups and downs so you can take on more risk with stocks to get that higher growth.
But if you have a short-term goal, you need that money to be safe and ready for you, which makes something stable like bonds a much, much smarter choice.
Okay, you've got the knowledge, you understand the options, and you've started thinking about your own goals. So for our final section, let's turn all of this information into simple, real-world action.
I just love this proverb because it's so true, isn't it? It is so easy to get stuck thinking, ugh, I should have started this years ago. Forget about that. The single most powerful thing you can do is just start right where you are, right now. And here's exactly how simple it can be. Don't try to do everything at once. Just follow these 4 steps. First, open an account. There are tons of great beginner-friendly places to do that. Then, set one clear, simple goal. Maybe it's just investing $50 a month. Choose that first investment, maybe a diversified fund to start. And then, here's the secret sauce. Just be consistent.
You know, it all comes down to one step, one decision, one deposit. That very first move, no matter how small it feels, is without a doubt the most important one you'll ever make. It's the one where you prove to yourself that you can actually do this.
So, there you have it. That's the breakdown. The mystery is gone. You now have the fundamental building blocks to start your own investing journey. You are officially standing at the starting line, feeling empowered, not overwhelmed. So the only question left is, what are you going to build?